She looks fresh.
No Monday blues on the Lal Street. The Sensex and Nifty gain over 0.5%, led higher by metals, autos, financials. Keep the gains in check. The Nifty bank underperforms. Mid-caps see broad-based gains.
Two-wheelers steal the spotlight in July, except for Bajaj Auto, Hero Moto, TVS and Royal Enfield see domestic growth of 19 to 25% on a yearly basis. Exports remain healthy for all.
ABB India tanks after reports weak numbers. The firm's order inflow was under pressure. A strong Q1 sees delivery hit fresh 52-week highs. MCX hits upper circuit. AB Capital also gains after it delivers in the first quarter.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Anand Tandon. Well, it turned out to be a good steady day in terms of the gains, and not to mention that we started the week on a positive note. So we had the Nifty, which was up around 157 odd points. What stood out was the entire metals as well as the auto pack, which really led from the front. The broader markets did see some amount of a catch-up as well. So the mid-cap index ended with a gain of around 1.4%. The advanced decline ratio also in steady state at around 2,500 stocks advancing to around 1,951 stocks declining on the Bombay Stock Exchange. As you can see, there was a crisscross and a widening which took place, giving you an indication of the breadth of the market. So overall, great day, great start to the week.
Indeed, and it also helped that the global markets were also fairly upbeat. So Asia closed with strength, gains between about 0.5 to 1%. And plus, some of the earnings that came through today were on the positive side. And we had fallen so much over the last 5 weeks in a row till last week. Markets were cracking. So in that sense, it was also a rebound from oversold levels. So good day, all in all, broad-based gains. Let's tell you what we've lined up for you on our show today. We start with the top movers and shakers. Hormuz joins in. The stocks which are on our radar today are Delivery, AB Capital, UPL and more. So stay tuned. We'll tell you why these stocks were buzzing. And last and not the least, we'll delve into the key market events to watch for tomorrow's trading session. But on to our first segment of the day, Hormuz joins in. He's at the big wall with the top movers and shakers. Hormuz.
Well, after 5 weeks of intense selling pressure, some respite on the screen, at least for the benchmark indices, and it was the index heavyweights that led the charge today, particularly Reliance Industries and the IT names that were on course for contributing to gains on the Nifty today, be it Bharti Airtel, TCS, Infosys, Reliance Industries, all of them contributing to the gains in today's trading session. Well, there were positive earnings reactions as well that came in from stocks like Ather Energy. That stock was up 16% after its results. There were also positive earnings reactions from stocks like MCX. There were also positive reactions from a lot of other names that reported results. Aditya Birla Capital is a case in point as well. On the flip side, though, there were negative earnings reactions that came in from a lot of these names, be it Narayana Health, be it the likes of a lot of these other names, be it PSP Projects after a block deal. That stock was also down 10% in today's trading session. Well, on the flip side, though, a lot of sectoral movers, the metal stocks were higher in today's session, be it the likes of SAIL, be it the likes of JSPL, Tata Steel, all of them contributing to the gains today. And almost every stock on the Nifty Metal Index ended in the green in today's trading session. And a lot of other rate sensitives as well, barring IT, be it the auto names, be it the real estate names, all of them did well. And lastly, among names that ended at a 52-week high, there are a lot of these smaller names, be it the likes of eClerx and a lot of other stocks that ended at a 52-week high in today's trading session. So all in all, a positive trading session nonetheless, be it for the benchmarks and for the broader markets alike.
Okay, all right, Hormuz, thanks very much for that. So there's a lot of stocks in focus in today's trading session, and definitely a lot of the metal stocks as well as a lot of the stocks were at fresh 52-week highs today. But now let's in fact go across to our guests. We have Anand Tandon, the market expert on the fundamentals, and Thakkar from ICICI Securities joining in to discuss what they made of today's trading session. Anand as well as Jay, welcome to the show. Well, Anand, let's start with you. You know, we ended very strongly, or relatively strongly, you would have to say, for the broader markets. What's your take?
The market is still reasonably robust, given the fact that, you know, the context in which we are investing today is a context where you have a very vocal US president who's completely who loves to make announcements without without any precedent, and therefore it's a very volatile environment that you are in, because many of the announcements have a direct economic impact. So you can't really factor that in, and despite that, the market have done reasonably well, given the fact that you're again looking at an earnings which will be not more than single-digit kind of growth in the current 1 year. That, along with the fact that the interest rates are reasonably low and therefore are pushing assets into the equity markets, implies that the valuations are a little higher than they should be. And I would imagine that unless something changes dramatically to rattle the market, we will likely remain kind of range-bound situation for the next at least a couple of quarters.
Okay, let's talk about the two-wheelers that stole the spotlight. In the month of July, we've seen some strong sales numbers come through. Hero Moto, TVS, Royal Enfield have all seen a domestic growth of about 19 to 25%. Sudarshan is here with the numbers.
So all the incumbent players, I'll say, so basically there were two news. One, on the basis of July auto sales, all these incumbent players were sharply higher, and Ather Energy reported Q1 earnings, and after the stock has surged more than 10%. So first, talking about all these players which have reported sales for the month of July, and except Bajaj Auto, all the companies have reported a growth even in the domestic segment, while Bajaj Auto had seen a decline of 13%. In the export segment, all the players have seen a growth, and in the export segment, growth was healthy and was in the range of 28 to 95%. So for two players, Bajaj Auto and TVS Motor, contribution of exports is somewhere in the range of 40 to 45%, while for Hero Moto and Royal Enfield, the contribution of exports to total sales is very minimum. For example, for Royal Enfield, contribution of exports to total sales is just 13%, whereas company has reported growth of 95%, so it's not that much. Now talking about the major outperformers in July. So two companies were the biggest outperformers, and those are TVS and Hero Moto Corp. Why TVS? So TVS reported an all-round beat, both in domestic and export segment. Now for Hero Moto, domestic motorcycle segment too has seen a growth, but here growth was below estimates. For scooter segment, growth came in at 64%, much higher than the estimates of 20 to 25%. Now, what about the outlook? So, festive season is approaching, and Hero Moto in its commentary said retail demand has remained stable, and now with festive season, they are expecting volumes to improve further. Now, coming to Ather Energy, it has reported a Q1 earnings, and earnings by the first look very steady. Losses have narrowed both on a sequential basis as well as year-on-year, and the revenue was led by healthy volume growth. That company has reported volume growth of more than 100% if you take a look at YOY. Now talking about the first bottom line, loss was at rupees 178 crore versus 183 crore in the same quarter last year, and versus rupees 234 crore in the last quarter. Revenue is up 80% year-on-year, and even EBITDA loss has narrowed. It has come at 134 crore versus 172 crore that company has reported last quarter. Now, recently, even two brokerages had initiated coverage on the stock. Even from current levels, these two brokerages, Nomura as well as HSBC, see upside of almost 20% from current levels, and that was the reason we saw a big move in Ather Energy in the last hour of the trade after Q1 earnings.
Anand, which one would be your preferred pick in the two-wheeler pack? And is Ola versus Ather, would you have a preference, or would you, it's both, either or neither?
I mean, it's not as if the two-wheeler market is cheap, but the most consistent performer for quite some time now has been the TVS Group. And while that is also reflected in the price, the numbers continue to develop positively. So if you have to make, imagine that's probably one of the better options. Ather versus Ola, I think Ola is still struggling in terms of being able to stabilize their service levels and their quality and delivery and all of that. So in that context, they will continue to lose market share till they get that right. And I don't see the management yet working hard enough to be able to correct that. So, by default, therefore, you're looking at the other if you're looking at the choice between the two.
Okay, well, you mentioned delivery, the word, but we have delivery, which soared over 6% on the back of what was a strong set of first quarter numbers. The firm's revenue rose 5.5% on a yearly basis. Mangalam is here with more details. Mangalam, take us through the key highlights this time.
Well, it's been a strong operational performance for Delivery this time around. Remember, the first quarter is seasonally weak for a company like Delivery or for a business like Delivery. 5.5% revenue growth, no great shakes out there. But look at the EBITDA. It's a near 50% growth out there, 53.4% to be precise. Margins improving by 200 basis points. And as a result of that, the net profit increasing by about 67% as well. It's been driven by a couple of factors. One, the express parcel business, the volumes have grown by 14%, revenues grown by 10%. Margins, while they've compressed a little bit to 16.3%. The management is confident that in e-commerce, the industry can continue to grow at 15% with them holding on, if not growing their market share, especially after the e-com express consolidation. And they believe margins can be between 17 to 18% by the end of this year. So there is improvement which is likely. And the second half is typically stronger for this vertical. Part truckload, which is where, a lot of the operational efficiencies are coming in. 3% margins have turned into 10% as the spot-on integration has taken place, and the revenues have grown by 17% with a 15% volume growth. Here too, the company believes that over 20% growth is fairly sustainable with 20% ROCE along with improvement in margins all the way between 16 to 18% over the next couple of years. So those two factors doing extremely well for Delivery. Going forward, they believe that capex as a proportion of sales will come down as well, and they do believe that their assets will be better utilized, net working capital days will improve as well. So on all parameters, we will see an improvement, which is why after seeing a rally already in the stock, it continues to do well. Just two things I'll keep an eye out on Delivery. One is the fact that, as we move higher on the stock, there are a bunch of institutional investors which at every level may at some point exit or look to exit. So that may cause some of the liquidity challenges for Delivery. And the second thing that we'll be looking at is how the company copes with one of its largest clients, Meesho, coming out and looking to drive in-house logistics.
Thank you very much for that strong performance. But Meesho as a client for Delivery will be watched, especially since they've gone in-house, as he pointed out. But let's talk about Marico. Came out with their Q1 numbers, largely in line with estimates. Remember, in the case of Marico, the company had already guided. They had a pre-quarter release, and they'd given us pretty much most of the numbers. So the key monitorable going ahead will be the gross margins. Revenues for the company came in at 3,259 crore, beating estimates. Volume growth was a strong 9%, highest amongst the peers, but in line with estimates. Profits after tax was marginally higher versus what the street was anticipating. The management said the impact of the unprecedented margin headwinds would peak out in H1. They also expect to sustain positive volume and revenue growth momentum through the year. The stock was up nearly about 2%.
Okay, all right. Well, on to the other stocks in news then. ABB India did see strong profit booking after it reported weak margins and a weak order inflow in Q2 CY25, while MCX and UPL hit upper circuit after better than expected numbers in the first quarter. Ria's here with more details on three of these stocks.
Well, yes, UPL today closed 7% higher, completely reversing its trajectory after it closed about 6% lower on Friday after reporting its Q1 FY26 earnings. Today, we have two brokerages coming out with notes on the stock. First up, Kotak Institutional Equities has a sell rating on the stock with a target price of Rs 520. They've said that Q1 has surprised positively on the gross margin front amid price increases in a few areas, input cost corrections, as well as increased plant utilization. They do say that these benefits may continue for some more time, although their long-term sustainability is uncertain due to demand softness and increased competition. On the flip side, HSBC on UPL has a buy call with a target price of Rs 775. They've said that the muted performance in Q1 FY21 was given the challenging conditions in some markets, and they do say that with a recovery and deleveraging underway, UPL is likely to enter into a virtuous cycle going ahead. Moving on to ABB India, this one was down around 5.5% today after reporting its Q1 numbers. This time around, the margins were weak as well as a weak order inflow as well. Revenue was in line with estimates. EBITDA margins came in at around 13% versus 19% compared on a year-on-year basis. Gross margins also saw a contraction of around 462 basis points, coming in at 38.2% in this quarter. The order inflow declined around 12% on a year-on-year basis, coming in at Rs 3,036 crores. Moving on to MCX, this one was up over 5% today after reporting its Q1 numbers. The numbers were good on a sequential sequential basis, but lower than the estimates that we were working with. EBITDA margins are at a multi-quarter high for this one, and EBITDA has improved due to lower employee expenses. And although revenue, EBITDA and EBITDA margins have missed estimates this time around, the net profit has been in line with estimates due to a 12% sequential rise in other income. And lastly, the board has also approved a share split in the ratio of 1:5 for MCX. The last one that was in focus today was AB Capital, up over 11% today after a very strong set of numbers in Q1 of FY26. They've seen strong growth across their business segments. They've reported a strong AUM growth of 22% on a year-on-year basis, led largely by business loans, which went up by around 25%. They also delivered a net profit growth of around 12% on a year-on-year basis, with ROAs improving in housing finance and cost efficiencies in the NBFC segment as well.
Thank you very much for that. Jay, before we get to some of the other stocks, first on two-wheelers, which is the strongest looking chart to your mind?
I would say, Rima, as far as two-wheeler names are concerned, definitely the strongest has been the TVS Motors. I mean, the kind of upward trend is what we have witnessed out there. Also, recently we have seen some short build-up out there on TVS Motors, and we have seen this rally coming on account of short covering, I'm sure, on all of these auto names. But then the stock is trading around its lifetime highs, has been consolidating in a very narrow band, is not correcting much. So this is one stock which I think is a clear winner as far as two-wheeler names are concerned, followed by Hero Moto for the short term, because that was too consolidating in a very narrow band. You can say that 4,400 to 4,000 levels, and that is broken out on the upside. So you can one can superimpose the target of 10% on the upside, which comes to 4,800. So it would be TVS Motors followed by Hero Moto.
Okay, all right. Well, thanks, Jay, for that. Well, let's now go across to JSW Cement, the IPO, which will open for subscription on the 7th of August. The IPO comprises of a fresh issue of shares worth around 1,600 crores and an offer of sale of up to 2,000 crores by existing shareholders and promoters. While speaking to CNBC TV18 earlier today, Parjindal, MD of JSW Cement, said it's poised for the next phase of growth and aims to quickly become the 5th largest player by capacity. Listen in.
Over the years, JSW Cement has been growing steadily. In 2016, when I took over the business, we were a 6 million ton company. And over the last 9 years, we've tripled our capacity from 6 million to now over 20 million tons. At that time, we were primarily only in the south. Now we've entered the markets of the west and the east. And I think now that the company has grown to this size and scale, we are truly poised for our next phase of growth, which is to enter the markets of the north as well as the central parts of India.
So today, I think you're the 9th largest player by capacity.
That's right.
Can you get into the top 3, top 5, challenge the Shree Cements, Dalmia Cements of the world?
The top 4 players of the country are well out of reach at the moment. And obviously, they also are expanding.
Sure.
I think the 5th spot is up for grabs. And that's the aim, is to try and see how quickly we can get there.
Okay, well, Anand, would you be a subscriber to the IPO?
Like I said, there are other stocks which are already listed. I don't particularly fancy getting into IPOs.
All right, okay. Anand as well as Jay, thank you very much for joining in and taking us through all of your views on the markets. With that, it's time for a short break. We'll get you all of the top corporate voices along with key market events to watch out for on the other side. Stay tuned.
Welcome back. Let's now go across the key corporate voices. So first up is Federal Bank. The management believes the worst is behind them. They added that agriculture and the MFI segment stress peaked in May and that June and July has seen better collections in this segment. They also expect limited impact from the 50 basis points June rate cut. The bank expects NIMs to decline by 10 basis points in Q2 and they expect the CASA ratio to improve further. The stock, remember, was in focus on the back of the Q1 numbers.
That's not all. We had the management of Narayana Health on the channel post Q1 numbers. The private hospital reasons dilution in margins is due to investment in its integrated care business. Adds its integrated care business will break even in the next 2 to 3 years. It highlights multiple cost pressures were faced in the hospital operations and overall across companies, and adds to partly offsetting these pressures. It took a low single-digit price hike earlier in January.
Okay, and before we wrap, let's get you the key market events to watch out for tomorrow. Ria standing by.
Well, yes, let's take a look at the key events to watch out for tomorrow. First up, keep your eye out on the PMI data coming out of India, Europe, the UK and the US as well. In the US, we also have the trade balance data coming out. And in Japan, watch out for the June monetary policy meeting minutes to be released tomorrow. Back home in India, a lot of earnings to watch out for. We have Adani Ports, Berger Paints, Bharti Airtel, Britannia Industries, Exide Industries, Gujarat Gas, Lupin, as well as Prestige Estates reporting their numbers tomorrow. In terms of board meetings, we have Power Grid, KPI Green and Max India to hold board meetings to consider fundraising proposals tomorrow. We also have Knowledge Realty Trust's rupees 4,800 crore REIT issue to open on the 5th of August. And lastly, Hyundai Motor India is also going to trade ex-dividend tomorrow.
All right, Ria, thanks very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Thanks for watching.